So I'd like to put your hands together and please welcome John to the stage. Welcome, John.
Hi,
John, good to see you. Have a seat.
Thank you.
I'd love you to tell us a little bit about yourself.
Yeah.
And then I know you've got some case studies you're going to talk about, and what you specialize in is kind of using data to really understand a little bit what's happening in the market. And I'm sure you agree with me, long term, property is a great thing to do, right? But actually,
Absolutely.
you can get better. Some areas are going to have better growth than others.
Yeah.
Yeah?
Yeah.
So hope that positions what you're going to talk about.
Thank you, Simon. Yeah, absolutely. What a time to be investing in property. There's so much noise about it at the moment. There's so much going on, and I can get tied up and carried away with the emotion of property. But what I'm more interested in is actually what's happening in the property world, what are the facts and what are the evidence, because that's my background. My background is data and research. I worked for many years as a data and research specialist in several companies. And what I really want to talk about to as many people as I can is the opportunity that presents itself right now in the property market. You very eloquently put it earlier in terms of the importance of equity growth and the opportunity that presents itself in the long term. And we're at one of those key pivotal points where that's going to be very, very relevant for everybody who's investing into the property industry at the moment.
Yeah.
So really what I want to talk about is the property market. I do something called a property market read. We're up to our 5th one now since I launched my business, Ultimate Landlord. It's now called Ultimate Landlord Research, just to make it a little bit simpler for people to understand. And the critical thing, Simon, is everything has changed.
Yeah.
Absolutely everything has changed. So it's critical that you continue to train, develop, learn and listen. And I think being part of PIN and working with people in PIN and learn and seeing the case studies and the experience that others have is critical. But that only takes you so far. I think you absolutely need to understand and have a grasp of data and the market, not just the total market, but what's actually happening on a local level in your business.
Because as I said, it's an average, isn't it? And there are micro pockets where market's booming more, where it's reclining. So it's the average is useful, but it can be quite dangerous as well, can't it?
Yeah, absolutely. I mean, they're going to be winners and losers all of the time.
Yeah.
And when we have events like this, that's amplified. There are far greater winners and well, how can I put it? And the losers lose a lot more than the winners win.
Absolutely.
And that's something that I learned in retail. So, as I said, I'm used to data. I'm a research and forecasting specialist. Did it for 20 years in my career before I went full-time as a landlord and as a property investor.
Yeah.
So I see this in all of the different strategies that are deployed at the moment. And again, I've written about this, I put it in my forecast, and I just wanted to remind people of the importance of data. I learned and cut my trade in data in all of these different businesses. Very quickly I realized it's actually very easy to plan and forecast and move forward with your business, with your business plan.
And just so people get this, you might think, well, what's SPA or Little got to do this?
Yeah.
But the whole point is these guys do a huge amount on research and things like population growth and demand because they want enough footfall and customers, and it's exactly the same in property, right? We want to understand where's the population growing faster than somewhere else, because that's going to have higher rental demand and higher price growth, right?
Definitely, and we are making massive decisions. We're dealing with large sums of data. These companies won't spend £200,000-300,000 without some data, without some understanding. Cadbury, I knew them well when I used to consult for them. They used to be focused on how much money would be made from the investment that they make, how much money would be made from the space that they take up on a shelf.
Yes,
that's
exactly.
important. That applies to property.
Yeah.
We need to understand that. And I think we talk about data, but it's actually insight. And Simon, you always remind people this, it's the insight. You have to get a deep understanding of it.
Absolutely.
And masterminders and people that are involved in PIN and those that have had the experience, they've gained a deep understanding.
Yeah.
They're ahead of the curve, they're performing better. And we can all do that, and we can all work to continue to improve that, because that will eventually ebb away, that knowledge. You need to keep it fresh.
Absolutely, yeah. Market is always changing.
Definitely. And in terms of a recap on the market, back in 2020 when everyone was saying, oh gosh, the market's going to collapse.
Which I thought as well, I must admit. I'm very honest about that.
Everybody did, Simon.
Yeah.
Everybody did. We were quite a quiet and nervous voice.
I'm very happy that the Bank of England said it was going to drop 16%.
They did.
And they've got rooms of people full of rooms like you who are doing all the numbers. And I said we were all wrong.
Yes and no. I think there was a lot of fear, and fear always works more quickly than logic.
Yes.
When your emotions are always very powerful, and I think we were very emotional at that point. Even the experts, even the data experts, we were worried. But we could see in data as we went through the year that the market was going to surge, and in 2021, we forecasted that was going to happen.
Yeah.
That was great for me.
Yes.
Built my reputation a fair
Yeah,
bit.
well, that's why you're on stage here, right?
I'm on stage
you
here.
You know what you're talking about.
But Simon, I bought houses as well. I bought property at this time. I bought it when people were holding back and waiting and wondering whether or not they should go ahead.
Yeah.
And it was the wrong thing to do. It was the wrong thing to wait. And we've all learned that. We've all got the hindsight now. But at the time, people were frightened.
Yeah.
And, you know, we've seen these house prices change. You know, if you look at the graph here, little orange tick at the end, we're already up towards 10%. Now, that's not unusual because we have a very short view of very short understanding of timescales. I mean, you again, just a moment ago, you were talking about what will happen in 5 years, what will happen in 10 years. We're just living in the now. We're worried about last year's prices. I don't care about last year's prices.
Exactly.
I care about the next 5 and 10 years.
Yes.
That's how I make my money. And again, you know, we also get waylaid by incorrect or non-correlating information. We talk about interest rates. And interest rates is very scary, and they're going to go up, and all of the noise that goes with that. Well, if you look at that chart that I've put up on the screen now, it's not the case. There is no correlation really between interest rates and house prices. We see the cycles, we don't see them matching. The critical thing that I learned from analysis is that actually what really drives the property market more than anything else from a data perspective is debt.
Yeah.
If household debt is increasing, property prices increase. It doesn't sound like it should be that way, but that is exactly how it is. If we are taking on more debt, house values have upward trajectory. They have upward pressure. What are we all doing now? What is the nation doing at the moment? It is
spending money.
Spending money that it hasn't really got. We're printing it. You mentioned that earlier as well. That isn't as a key indicator for change in the property market. That's how we're able to forecast confidently. Now, if we look at supply and demand, obviously we've got demand and we've got supply. The demand is outweighing the supply at the moment, so we've got prices increasing. And I just took this just as an example. We'll go through all this data next week, but just as a snippet, I wanted to just talk about the turnover of stock in estate agents at the moment. In August this year, in these postcodes, we were over 100% of the stock that is listed in an estate agent was selling in that month. They were turning over all of their stock. And yet we've also got postcode areas where agents were turning over less than 5% of their stock. Which area do you want to invest into? Do you want to invest into the high growth, high demand area or the low demand area? This is the critical thing about property. It doesn't all move at the same time. And again, we can see that across the nation where we've got the rebalancing of regional growth. Different regions growing at different rates. And we've also got a big imbalance between the most expensive areas and the least expensive areas. So our ability to understand this is critical. It's critical because if we understand this, we can actually sort of circumvent, or we can hack the property industry, and the property market, and work out where's my money going to go furthest? Where's my training going to go furthest? Where's my time going to go furthest? All those things are critical, and this is critical at the moment because there's huge variance. This is again growth versus demand. The larger darker green bars are the demand. You can see this is Cardiff. 80% of stock, or over 80% of stock is selling in CF35, and yet the growth is just ticking around 11%. Not bad, don't get me wrong, it's not bad, but 80% of the stock's going. Then we've got other areas. If we took over towards the right, CF42, one in from the furthest right, that's only got a turnover of stock of around about 37%, and yet it's got exactly the same growth. Where do we want to invest as investors? Where the demand is. We don't want to be late to the party.
Absolutely.
And that's critical for us. And then we've also got affordability as well. If you take Liverpool, another part of the UK, there's massive variance between the affordability of houses. This is average household income versus average house price. So what we are witnessing at the moment in this transition is people moving away from areas, moving to different locations, and those areas that are affordable are seeing higher levels of growth. Now, affordable doesn't mean cheap. You might have people earning a lot of money in an area, but relatively the properties are cheaper. We and you and everybody need to focus on this because this is a key driver, a key mechanism for growth, and there are significant opportunities at a local level. That's just Liverpool. Imagine this across the whole of the UK. It's enormous. And again, we can see this in terms of affordability on rent as well, massive disparity. So what's actually happening is we're seeing all this consolidate, come together, and it's making a lot more sense to focus specifically on very local regions and very specific strategies in areas, which again is something that is a critical part of PIN training.
Absolutely.
And then we got, I'm not going to go into too much detail. I just want to talk about mortgages very briefly. Don't be misled by the noise or the opinion. It's really important we understand that it's critical that you get the information and the data for your business plan and for what you plan to do with your strategy, because at the moment there's a perception and a reality, and they're out of balance.
Often they are, right?
Oh, absolutely. Yeah. And it frustrates the life out of me. The critical thing for us at the moment, there's no growth in people like us. There's not more of us coming to the market. Buy-to-let investors are pretty static. We haven't grown a huge amount in terms of numbers and in terms of mortgages. There's no growth in first-time buyers, Simon. It's
really?
Not. There's no new people coming onto the market at the moment. There is a big fall in remortgages as well, so people aren't remortgaging. The significant growth in the market at the moment is home movers.
Yeah.
Now, that, to me, says actually all these other areas where we haven't got growth at the moment are to come.
Yes. Because there's a ripple effect, isn't it?
Absolutely. So we've already got people moving homes, and we're now realizing all these people are moving homes, and the stock is selling, and therefore we're now starting to get engaged, and we're looking to capitalise on this, as will other people.
Yeah.
And that's the transition into 2022 and what will happen next. Inflation, you mentioned as well. Inflation is critical. We've got all this noise in the market at the moment. Just the key one for me there is inflation is different to the 1970s. That's what the Bank of England said. Just 2 months ago, the Bank of England was saying we're not really that worried about inflation, and now they're putting out statements like this.
Yeah.
Can't always trust what you read in the media. But we'll all be aware that there's huge inflation everywhere in different markets and different sectors. This is going to filter in to property values and property prices as well. You just need to look on the ONS and you can see almost everything is indexing upwards in terms of inflation. So the property inflation pressure for us is legislation, energy changes and the energy efficiency of properties, taxation changes, the material costs, anyone that's doing refurbs, getting materials.
It's expensive at the moment.
Finding just getting the most basic stuff, and it isn't getting better. Job changes, planning, credit and the credit availability change as well, and the wider economy. This is all putting pressure on property prices and causing property inflation. So what this means to us, and what I think we really need to ask ourselves is, what are we doing? Do we buy, do we sell, do we wait, or do we change strategy? And I think you could answer yes or no to any of those depending on where you're investing and what you're investing into. Some of you may need to just do some slight course changes or course corrections in order to get the best out of this. So the market forecast over the next 12 months looks something like this. What we expect to see is house price changes to cool down. So there'll still be growth, but the growth will slow down in the final quarter of this year. Do not be alarmed. This is expected. We knew this was going to happen. We are transitioning into a period where we are looking at the previous 12 months, where we were then emerging from lockdown, where then we had that sort of hysteresis effect where everything snaps forward and everybody starts buying. So it's to be expected. But bear in mind that in quarter one of 2021 this year, we went back into lockdown. Yeah. I'm not expecting us to be back in lockdown in quarter one 2022. I may be wrong. But if we're not...
We don't know, right?
No, we don't know. Of course we don't. But if we're not, you can expect to see significant growth in property values in quarter one and then really run away with itself in quarter two, because people will... It's a fear of missing out. You know? I must do something like that. So we're going to see significant growth throughout the rest of 2022, around 7%.
And there is that fear of missing out, but I think it's a genuine fear. I think people don't get their arse in gear. They are going to miss out.
There's never been a better time. I mean, it's all well and good me showing this graph, right? But if you dive into the data, and if you get a chance to come and see us next week, when you dive into the data, there are locations that are going to grow 22%. Yeah. There are locations right now that are already growing in excess of 20%, and house types. We talk about the need to refinance or recycle our funds. Why not let the market do it for you? Yeah. Absolutely, you can sit on it, do nothing at all, recycle your money through refinancing. And again, PIN and the PIN team are excellent at teaching you how to do that. This is probably the best time I've ever seen, going back through all of the data sets right the way back to 79, the best time to do that. Yeah. And it's not going to last for long. We've only got a couple of years and that will go quickly.
Yes, it will, yeah.
And then we've also got the next 5 years as well. So over the next 5 years, we can expect to see significant growth in house prices through 2022. It's actually going to get higher according to our modelling in 2023. That as we go beyond 2 years, it gets a little more difficult. We do expect it to come back down, but generally it's going to be ahead of where we've been over the last 10 years. A long-term prediction is that it's going to pretty much remain above 5% for the next 5 years. And that's all well and good, but what does that actually mean to us? Well, it means that an average £150,000 property will increase by £61,000. I don't know anywhere else where I can get those sorts of returns on something so secure and something in such demand. 41%. If you fast forward that to 10 years, well over your 100%, well over double.
Yeah.
And it's
so that reinforces the general rule that properties double every 10 years.
Definitely not in a linear way. So it's not
absolutely.
It's not a
They go
line.
up and they go down, right?
It's always an S curve.
Yes.
And what we did in 2008 is we just prolonged the S curve. We just said, oh gosh, we can't have a big dip. So we just did everything we could to prolong that dip for as long as possible.
Yes.
And now we're reaching a point where we can't sustain that any longer. It must go up.
Yeah.
And again, this is just the average. There are outliers, there are areas, there are property types, there are strategies that will massively outperform that. Massively. So you need to be trained, you need to be ready to execute, you need to be ready to take action, and you need to have the right data and the right plan in order to execute on the data and the information that you're given. There is wider inflationary pressures as well. That may cause us to make compounded figures. We may actually see further growth. But property is such a great industry to be investing in right now because of all of the issues in relation to the supply and the demand, and it's not likely to change anytime soon. So what I do encourage and I implore everyone to do is check the market right now, not just the total UK market, but your local market, what works best, set your budget, find the preferred location, not what you emotionally prefer, what you factually prefer, and then decide upon the strategy or the investment type that works best in that area, because everything is changing.
I do hope you enjoyed watching this video. If you enjoyed it, I highly recommend some live online training that we're doing. All you have to do is click on the link below to get full details. And the great thing about live training is obviously we can interact, you can ask me questions and we can answer them live in the moment. So come and click on that live online training. I look forward to you very soon. In the meantime, I've lined up another video I think you're going to find very useful. So invest with knowledge, invest with skill.